is up, everybody? Welcome back to the Crypto Sherpa channel, where I cover the daily news so that way you can stay informed what's happening and what's going on in crypto space and just all markets. Because what happened this weekend? Are we experiencing a Black Monday event that was like kind of equivalent to COVID, equivalent to the recession days? I don't know, but if you look at the markets, it is red everywhere. Not just crypto. Here's crypto bubbles. You can see that it is red, red, red. Bitcoin down 5%. We touched like under 75. We're at 78, went to 83. But this is just the crypto market. Now let's take a look at the stock market. Bubbles. It's red everywhere. So yes, we are in a sea of red. Now, what is causing this? Well, the usual is still the tariffs action is going on right now, which is just hindering all markets. I think China readjusted their tariffs too. So it's like a tariff war going on. But I feel like everything we're seeing right now is kind of like a chess game. Trump was just playing out because we all know the Fed was like just not biting or budgeting against the like, well, no, we can't cut rates at all. We're not going to do it. This kind of feels like Trump is just forcing his hand. So we're going to see what plays out with this, with interest rates, if that'll go down, keep increasing, if anything goes there. Again, and also people are also trying to pay attention to the M2 money chart, or the M2 money line of supply growth and everything. They're comparing that with Bitcoin. Like we got a chart here showcasing like how sometimes Bitcoin follows that line. And then there are like some people think like in April, like this month now, like we should see like this increase. Like where was that? I think that was this article right here, just talking about the M2 supply liquidation. So yeah, if this goes on like from March 24th blast off from April 30th. So two signs of like what go on. Like it looks like it didn't happen on March 24th, but we still have April. So people are following the M2 money line to see if Bitcoin's going to follow that trajectory. And then again, like I said, like everything's revolving around Trump's like tariffs, and are we going to push like Jerome Powell to cut the interest rates out there? And when that happens, then of course Bitcoin goes up, because again, like it makes people feel like they can take more of a chance because there's not so much of an interest rate on top of it. So that is really what's going on. But let's go through this article covering Black Monday 2.0 and like 5 things you should know, and like just everything going on. So here we go from our first article from Cointelegraph. So here we go. Bitcoin battles everything from a death cross to record low sentiment as U.S. trade tariffs wreak havoc across global markets. Now, will 2021 prices return? I don't know. Let's find out. So Bitcoin is turning back the clock this week as tariff mayhem drags on, with the BT price action towards like 2021 levels. So yeah, we're kind of seeing that. But Bitcoin is giving up market support lines left and right as the new death cross completes on the BTC USD daily chart. We also know that CPI week is firmly overshadowing by the US trade tariffs and their increasing global impact on the stock markets. And both crypto and TradeFi market participants are drawing comparisons to Black Monday of 1987 and the COVID-19 cross-market crash. Now, also, Bitcoin's speculative investor base is firmly out of pocket and likely to increase, tempted to panic sell. Now, sentiment everywhere is non-existent, with the TradeFi Fear and Greed Index recorded its lowest score in history. And yeah, I think the Fear and Greed Index right now is at a 17, so it is pretty low. Now, let's talk about the BTC price death cross that brings 2021 highs into play. So Bitcoin risks falling below its old all-time high from March 2024, and next, the data from Cointelegraph per trading view shows this right here. So the BTC USD 1-hour chart source. Now, after slipping below $75,000 for the first time since November, BTC/USD is rapidly reawakening long forgotten bull market support lines. These include $69,000, a level that first appeared in 2021, and the dive, which came as a copycat move several days after stock market began to suffer major losses, caught many by surprise. Now we got a tweet from Charles Edwards saying that, is our uncorrelated hedge in the right room? Well, this is BTC's last chance to maintain its macro uptrend structure, says Kevin Sven, summarized in an X warning. So, Now, among the trend lines now, the lost has support its 50-week exponential moving average at around 77,000. Now, in an X thread on the coming week, trader Crypto Nuevo described price volatility that the level is at the only short trigger, and he'll be paying close attention to it. So he believes it might be just a short trigger, which again, we did see a little bounce back to like 80,000 just a few moments ago, but we're back at 78. So people are buying the dip and like try and keep that support level there. But if we drop below support and get back above it, then I'll consider this as a deviation, and that will be my long trigger for a push up back to $87,000 zero. Now, trading resource material indicators flagged a telltale death cross on daily timeframes. This typically is a bearish signal that involves the 50-day simple moving average crossing below its 200 daily equivalent. Now, here is that chart showcasing that 1B chart with it. We got support lines there, and then here we are right here for the next support level. So yeah. So let's go over now the CPI week, which meets emergency rate cuts. I was talking, are we going to see rate cuts happening? I don't know. But like last week, U.S. trade tariffs are the major talking point across financial markets worldwide. The impact of measures announced last week continues to be felt as downside momentum on risk assets now become fueled by the prospect for more tariffs set for release on April 9th. So we got 2 days to expect that. Now, speaking to mainstream media over the weekend, Commerce Secretary Howard Lutnick confirmed that the U.S. government would go ahead with the measure without delay. Now, the tariffs are coming, he told Cointelegraph. Now, with sentiment diving and panic among market participants from trading desks to hedge funds, little attention is paid to the week's other potential volatile catalysts out there. Now, these will come in form of U.S. inflation data itself. A key topic is tariffs risks causing unexpected price growth. Now, the March prints of the Consumer Price Index and Producer Price Index are due on April 10th and 11th, respectively. Now, previously, Jerome Powell, chair of the Federal Reserve, said that while tariffs would have a palpable effect on the U.S. inflation battle, it would be difficult to assess this accurately in advance. Now, as the new policies and their likelihood of economic effects become clear, we will have a better sense of the implications for the economy and for monetary policy, he subsequently said during a speech last week. Now, here we see a chart with a comparison from May FOMC meeting and the source group. But market expectations of the Fed easing policy to compensate for the tariffs are clearly reflected in interest rate focus. So we'll definitely play a role with that. But the latest data from CME Group Fed Watch tool now shows that consensus favors a 0.25% rate cut at the Fed's May meeting sooner than the June deadline assumed until this week. So again, he might push a 0.25% cut like later on at the end. Is it May? Yeah, so it started next month. That will come a lot sooner because they were expecting June because they might just have to take some action there. So yeah, so let's hopefully see if something goes on then. But in informal circles, including social media and prediction platforms such as Polymarket bets of an emergency rate cut coming sooner or higher is rapidly rising. So people are taking bets on it now with Polymarket. Are they going to do it sooner? If you want to try to take a piece of action, go to Polymarket. But the Federal Reserve may have to make an emergency rate cut soon, Professional Capital Management founder and CEO Anthony Pompliano predicted at the weekend. They said inflation has fallen to the lowest level since 2020. If this continues, it will be a big problem. So, Now, Black Monday 1987 or COVID-19 repeat. Is this what we're seeing? In the short term, the effects of tariffs are feared to include a market-wide crash similar to Black Monday in 1987. As Cointelegraph reported, market responses to the first round of reciprocal tariffs laid the foundation for turmoil at the upcoming Wall Street Open. Here is a tweet from Michael Van de Poppy. A 10% dip in the 2 consecutive days has only happened for the 4th time in history. October 1987, October 2008, March 2020, and April 2025. In 1987 and 2020, it marked the bottom. And in 2008, it took 1 more month to mark the bottom. So are we going to see another month of this right now and maybe take some action at the end of April? But for trader analysis and entrepreneur Michael Van de Pop, crypto Black Monday's moment is already here. He said, I think we'll see a roller coaster 1 to 2 weeks in which we're having a test of the lows for Bitcoin. It can go as deep as $70,000 from here. He warned ex-followers out there. So again, we still know where the low is going to be, but it's going to be a fun 2 weeks. It's not going. He didn't say it's going to be fun, but for us hodlers out there, it is going to be very fun. But Van de Poppe saw an emergency Fed rate cut as the only logical escape path for stemming the risk asset of any further bleeding. So we are really hoping for a rate cut. But trading resources, the Kobesi letter, pointed to heavy losses in both Chinese and Japanese stocks during the week's first Asia trading session. We are seeing the market's first circuit breaker since March 2020, it reported, and Kobesi described market sentiment as polarized, drawing multiple comparisons to COVID-19's cross-market crash in March 2020 and beyond. This is by far the most panic we have seen in the market since March 20, and in fact, we may be nearing investor panic levels above March 2020, He said it's currently a widespread rush to the exit for investors. Now, Bitcoin's new hodler losses multiply. On the Bitcoin investor cohort, likely first capitulated on short-term holders, the market's more speculative entities with a buy-in date within the last 6 months. As Cointelegraph reported, these investors are highly sensitive to the BTC price volatility, and their panic selling creates a vicious circle for the market. Now, data from on-chain analytics platform CryptoQuant now shows that the STH cohort is falling, increase into the red. So short-term sellers are falling, and we got more long-term holders coming. Now, the spent output profit ratio metric, which tracks the STH coins moving in profit or loss, is currently below its break-evens. Now, when the STH/SOPR falls below the 1.0, it reflects that short-term investors are realizing losses, and a classical signal of capitalization, CryptoCon contributor Yancey noted in one of his quick take blog posts. He said, looking back at 2024, major price corrections were accompanied by sharp drops in the STH/SOPR, often reaching a falling below the -2 standard deviation band. Now, these moments, notably in May, July, and August, align with periods of panic selling among short-term market participants. So here is that chart on BTC short-term hodlers and where they're at. So below $80,000, the BTC-USD is now comfortably under the aggregated cost basis for the STH investors, CryptoQuant confirms. Now, Bitcoin's total aggregated cost, which includes long-term holders, currently sits at $43,000. So, yeah, the long-term holders are still sitting at the $43,000 mark, so they're still in the green right now and still holding. But the sentiment eclipses bearish records. In a sobering yet arguable bizarre move, the extent of bearish sentiment on traditional markets as measured by the Fear and Greed Index has fallen to extremes. The latest data from the index, which uses baskets of factors to compute the market move, gives a reading of just 4 out of 100. It's never been this low, not in COVID, not after FTX collapse, crypto commentator Atlas noted. So we've never been this low in any of those events out there. Now, crypto continues to weather the storm somewhat better, with a Crypto Fear and Greed Index at 23 out of 100 on April 7th. Now, beyond the panic, some voices are cautiously hinting that now is an ideal moment to buy the dip, whether on stocks or in crypto. And if you don't have the money to buy the dip right now, the Crypto Club can help you. See this little tagline going on it? Need a Bitcoin/crypto loan? We can help you take a loan out to buy more Bitcoin. Yeah, and it's going to be no KYC Bitcoin. So it's just a thought. But if you want more information, call that number, 941-413-6920. And we got operators online ready to answer any questions you may have. Now let's continue on. So this doesn't necessarily mean that the absolute bottom is in yet, but it is generally at least a local opportunity. Charles Edwards, the founder of quantitative Bitcoin and digital asset funds Caprioli Invest, argued in an X thread. Now, Edwards tallied up both bullish and bearish arguments and concluded that much risk remained, especially to Bitcoin's bull market. They said, to be fair, Bitcoin did very well last week, but has played catch up to the downside over the weekend. Pending some large unforeseen news, it's going to be hard for Bitcoin to fight a correlation equal to 1. In the event across risk assets, we saw something similar in early 2020, he committed. That said, there is a historically significant relative strength, and here to note, we can likely expect Bitcoin to rally the hardest off the bottom, wherever and whenever that is. So again, we don't know when that bomb's going to hit. We could see 1 or 2 weeks from it. We got to maybe wait to hear what happens with rate cuts. Is that going to happen? Because that could help solve the bleeding. And yeah, so that is everything going on with Black Monday. Are we following those previous cycles? So yeah, lots of news right there. Now, there's still more stuff to be aware of what's going on this week for why prices can still go down. So here are some key events that are going on this week. We got reciprocal tariff responses likely to begin on Monday. That's today. We have a Fed meeting on the Fed meeting minutes on Wednesday. And then we have the March CPI inflation data coming on Thursday, initial jobless claims data on Thursday as well, and then the March PPI inflation data comes out Friday, as well as the Michigan consumer sentiment data. So yeah, so there's some key, just little just dates and information you should be aware of, because these will affect the price of all the markets out there. And again, it is red everywhere. Stocks, tech, crypto. It's like it's red everywhere. So just be aware of that, guys. But that is what is going on and what you should be aware of. And again, maybe buy the dip. Arthur Hayes is talking about that because he believes like quantitative easing could or quantitative something. Let's just go through this article, hear what actually Arthur Hayes has to say, because he is doubling down on the Bitcoin buying the dip. So here we go. Let's go through this and hear what Arthur Hayes has to really say about this. So he remains defiant, joking about his credibility while maintaining the quantitative easing will ultimately send Bitcoin skyrocketing. So yeah, so he believes quantitative easing is going to cause the price of Bitcoin to skyrocket. But the crypto market is reeling from one of its sharpest pullbacks in months, with Bitcoin dropping to $74,000 amid escalating global trade tensions. Now, the sell-off has traders scrambling to assess whether this is a temporary correction or the start of a deeper downturn. And at the center of the storm, it is outspoken BitMEX co-founder Arthur Hayes, who is urging investors to buy the dip, even as his 76,500 support level gets decimated. Now, again, we are experiencing trade wars, tariffs, and market turmoil again. A combination of macroeconomic uncertainty, aggressive trade policies from the U.S., and rising expectations of monetary intervention collided to send traditional financial markets into a tailspin. Now, while Bitcoin initially seemed to keep its head above the water, making gains while major U.S. stock indices dropped, the after tremors have finally hit, with the cryptocurrency shedding 10% of its value in the last 24 hours. Hayes had earlier predicted BTC would hold the 76,500 level until April 15th, the US tax deadline. However, as the writing, the number one cryptocurrency was trading at 74,800, way below the analysis expectation. Now, his latest post oscillates between defiance and dark humor. Oh, what shall I do if BTC breaks below 76,500? My credibility will be in tatters, he joked. Now, at the time, the former crypto executive urged his 672,000 followers to take advantage of the price drop and accumulate, issuing a profanity-laced rallying cry, "Buy the effing dip," he said. However, not everyone shares Hayes' conviction. Some ex-users were quick to ridicule his calls, with one trader writing, "You genuinely have no credibility. Even a broken clock is correct twice." Another compared him to CNBC's Jim Cramer. Ooh, you never want to be compared to him, which is a frequent target of the crypto community disdain, because yeah, every time Cramer says something, the market does opposite. So yeah, that's why it's not really good to be compared to him. But still, others defended the Bitcoin enthusiast, pointing to his long-term logic, and the outcome matters. But your reasoning is more important. I am confident in your logic, and the long-term will yield results better. Now, let's talk about the incoming quantitative easing. So Hayes' optimism stems from his belief that mounting bond market volatility will eventually force central banks to resume aggressive money printing. And if you're trying to predict when the Fed caves and goes brr, watch the Bond Volume Move Index, the analyst wrote in an X post on Monday. These are the two markets the Fed will defend to death. One, and that's greater, 140, Yahtzee time. So they're going to be defending us. So that's why he wants you to watch that. But the crypto investor has long argued that the monetary expansion will act as a springboard for Bitcoin's next parabolic move. In his opinion, the ripple effect of Trump's economic nationalism will force monetary authorities around the world into a new wave of quantitative easing, and smart money should be prepared for the inevitable influx of liquidity in crypto. So yeah, so he is still waiting on the quantitative easing thing, and the whole world is going to be making these changes from just what's going on right now. So again, we got that to look forward to too. Quantitative easing around the world. Will the Fed cut rates? And are we going to follow the M2 money line? So lots of things to pay attention to out there. But that is Arthur Hayes saying buy the dip. But let's continue on with some more Bitcoin news. There are some good things happening in Bitcoin. Bitcoin reached a historic first. We just reached 1 zettahash in the hash rate for Bitcoin's mining operation. So yeah, that's a first time ever. Usually we're in the exahash hashes, but right now, or not anymore, but we did touch 1 zettahash. So let's learn a little bit about that. The Bitcoin network rate briefly soared above 1 zettahash per second, multiple data sources show making it one of the world's most powerful supercomputers. So yeah, Bitcoin is a supercomputer and nothing's going to beat it. Now, the Bitcoin network hash rate has topped a 1 zeta hash per second for the first time in Bitcoin's 16-year history, according to several blockchain data sources. Now, Bitcoin's hash rate crossed the milestone on April 5th at a peak of 1.025 zeta hashes a second, according to the mempool.space data, while the BTC frame data said it hit 1.02 zeta hashes a second a day earlier. Now, data from CoinWars says that the Bitcoin hash rate soared to as high as 1.1 zeta hashes on April 4th at a block height of 890,915. However, the same data indicates that Bitcoin's first crossed the 1 zeta hash on March 24th. And here's that chart showcasing that where you can see like the many times it did pass that. But there are some discrepancies in the Bitcoin hash rate tracker. The differences result from the varying approaches used to calculate hash rate, such as when block times and difficulty adjustments are measured, which Bitcoin nodes and miner pools are used to pull data from and more. Now, Bitcoin cypherpunk Jameson Lopp also previously pointed out that estimating Bitcoin's hash rate with 1 trillion block as opposed to 5 can result in the difference of over 0.04 zeta hashes. So there's where some discrepancies could come in, but viewing that raw hash rate metrics can be decisive due to the random variations in block times, added block resolutions. Head analysis Mitchell Askew, who pointed out that Bitcoin's 30-day moving average hash rate is still around 0.84 zeta hashes and marks it in the note for Cointelegraph. But notching the 1 zeta hash is a massive network achievement. So despite the discrepancies, the feat highlights the massive amount of computational power and increasing decentralization of the Bitcoin network, making it more secure than ever and significantly reducing the likelihood of a 51% attack. So this is great news for the Bitcoin network. And like, if anybody's ever worried about an attack on Bitcoin, it's like, yeah, let's have our network be even stronger. And that's what it's doing. Now, the Bitcoin network's reported rise to 1 zettahash is equivalent to 1,000 exahashes per second, which marks a 1,000 times increase since late January 2016, when Bitcoin first hit the 1 exahash for the first time. Now, the second largest proof of work crypto network is Litecoin, which is my other coin I do like holding a bag of. But it currently boasts a hash rate of 2.49 petahashes per second, according to CoinWars, making it around 40 times less computational powerful than Bitcoin. Now, Askew noted that the huge rise in hash rate has coincided with more commercial Bitcoin mining firms competing to solve Bitcoin blocks in recent years. Miners are doubling down, expanding sites, and plugging in more efficient machines. Askew said, adding that less efficient miners could soon be washed out unless Bitcoin's price rallies again in the coming months. Now, Mara Holdings is the largest Bitcoin miner with more than 50 exahashes of computing power, while the largest share of hash rate is channeled to Bitcoin mining pools Foundry, USA Pool, and Ant Pool, according to the hash rate index. But at least 24 publicly listed Bitcoin companies have machines set up to mine Bitcoin, according to the company's marketcap.com. Now, among the other large miners contributed hash rate are Riot Platforms, Core Scientific, CleanSpark, Hut 8, and TerraWolf. Now, Bitcoin's mining hash rate soars as BTC's price on recession fears. Now, the new all-time high in Bitcoin hash rate came in the middle of a sharp market downturn, with Bitcoin falling nearly 10% over the last 4 days to $78,750, while U.S. stocks saw an estimated $6.6 trillion loss on April 3rd and 4th, the largest two-day loss ever. So yeah, stocks took a big hit. Now, much of the fall has been attributed to President Trump's tariffs plan, which may industry analysis say they're sparking recession fears. So yeah, people are still sparking the thoughts of a recession going on. But again, we just got to wait to see what happens. It's all in the plan, right? But congratulations, Bitcoin's network, for hitting the 1 zeta hash. And again, this is only accomplished by all the miners that are mining Bitcoin out there, even the individuals out there mining it, supporting and securing the network, just adding that computational power to the Bitcoin network. And yeah, we are all together making Bitcoin the strongest and most powerful supercomputer out there. So way to go, guys. Now, let's also talk about some other like solo miners out there. They are actually winning right now. So this is because it's a little bit more friendly. People are Like more people are just plugging in a little solo miner trying to win that 3.125 Bitcoin on their own without sharing in a meme pool area. But no, I'm starting to see a little bit more articles of solo miners winning. So let's talk about this one. So more and more solo Bitcoin miners are winning and are being celebrated on social media amid a rise in hobbyist rigs. Now here's what's going on. So another solo Bitcoin miner defied the odds last week, processing a block and bagging a 3.125 Bitcoin reward. At the time, and including the transaction fees, that was around $259,637. And that was a nice payday. And it was one of several such solo scores in recent months. Now, was the miner lucky? Is solo mining becoming more common? And can an average Joe hook up a hobby mining machine and succeed with minimal resources compared to publicly traded miners out there? The answers vary. Miners are a term used to describe everything from individual hobby miners to groups that prefer to operate privately and discreetly, and they are succeeding more often, although not dramatically. And the totals are unlikely to spike significantly. Now here is where the solo miner was found, solo C key. So that's how you can tell on the mining block. Oh, so that was mined by one miner out there. Now mining without the support of big pools is still like playing the lottery, said Scott Norris, CEO of independent Bitcoin miner Optimimer. In 2022, solo miners using the Solo CK pool, a service allowing anonymous miners to get started with mining hookup without the need to run their own full Bitcoin node, solved 7 blocks. In 2023, the number jumped to 12 blocks. Fast forward to 2024, and the number hit 16 blocks. But a block mined using the Solo CKP pool or the CK pool, which is not a traditional mining pool, despite the name, does not necessarily mean someone is mining Bitcoin with very little hash rate alone in their bedroom. Some crypto Twitterizers have loudly but erroneously made this claim. Now, the mining pool industry is dominant by a handful of big players, think Foundry, Ampool, F2 pool, and miners hook up the pool and shares their resources and then split the rewards. With a service like Solo CK pool, the miner will get the reward once they find the block and keep nearly all of it. Now, as the Bitcoin network has grown more powerful and resources are needed to mine blocks, and mining businesses often are industrial operations run by public companies, some hardcore Bitcoiners argue that this is a bad for Bitcoin because the network should be decentralized as possible. But with hobby miner rigs like BitAxe and FutureBit Apollo, which sell from $200 to $500, are now the favorable gadgets out there. And Bitcoin maximalists in January, a FutureBit Apollo processed a block, but only thanks to the nonprofit group donating hash rate, the computational power committed to supporting the Bitcoin network to the machine from other machines. Now, the idea was to dismantle the prosperity mining empire to make Bitcoin and freedom tech accessible to anyone. And the pseudonymous Bitcoin miner, Econull Alchemist, he wrote on X, so this is what he wrote. The 256 Foundation is holding the first annual fundraiser for Telehash on January 29th, where self-hosted solo mining on Apollo donated by the FutureBit, plus they synced it and configured the router. Tune in to watch. So if you want support of our mission to dismantle the proprietary mining empire to make Bitcoin a freedom tech accessible point, you can always go to that link right there, but that's on you. Now, even with slim odds, the rise of hobby miners could be fueling the apparent growth of individual block wins. In recent months, an interview with Decrypt and the Econull Alchemist noted that the recent trend of growing solo success, every once in a while and more frequently than single machine processing a block, is a BitAxe or similar small mining device found running quietly in someone's home, he said. Now, Optimimer's Scott Norris noted that conglomerates could be processing blocks by not using a big pool, but by having a lot of hash rate. Now, even Houston's Texas-based Solo Satoshi, which sells mining equipment like the BitAxe Gamma, says on its website that using a $180 BitAxe machine with a hash rate of 1.2 terahashes per second would have a 0.0006839 chance per day of mining a block. Now, but Matt Howard, who was founded by Solo Satoshi, said that getting stuck into solo mining isn't really necessarily about the payday. The primary goal is more decentralization. Finding a block and getting the Bitcoin reward is a bonus, it really is, he said. But to the Bitcoin maximalists, they understand that mining needs to be decentralized. So again, so with solo miners, it's like the biggest thing is like you are supporting the network, you're adding some extra computational powers to the Bitcoin network out there. And again, it's a nice little bonus if you do win it. So yeah, just because we see these articles of solo miners like solving a block out there, getting a nice little reward, it's not going to happen all the time. But if you want to be a solo miner, like the real thing is like you're helping secure the network. So that's like the biggest thing of it. And if you end up winning the block, woo, thumbs up to you because you just got 3 Bitcoin right now. So that's their news on solo Bitcoin miners. Like, are they winning more than the traditional mining blocks out there or mining farms out there? No, but they still are supporting the network. So that was that Bitcoin news. And is there anything else we got going on? Oh yeah, we got why restaurants firms behind Fatburger and Johnny Rockets is embracing Bitcoin. So yeah, they are embracing it. They're not adding it to their treasury. They're not accepting it for payment for their restaurants, but they are going to be paying royalty payments with Bitcoin. So yeah, let's go through this article to learn a little bit about it. So the publicly traded Fat brand is now accepting Bitcoin for franchisee royalty payments and won't rule out the other assets or customer payments. So franchise owner of restaurants brands Johnny Rockets, Fatburger, Round Table Pizza, Great American Cookies, and other Fat brands entities can now pay franchise royalty payments in Bitcoin. And if those owners are smart, they will accept it because that is an appreciating asset over time. So I would definitely like to get my royalties paid in Bitcoin. So hopefully they will do too. Now, the publicly traded Fat brands, otherwise known on the NASDAQ as FAT, F-A-T, which boasts 18 different franchise concepts and more than 2,300 locations worldwide, said that the move underscores its commitment to financial and technological innovation. Over the years, Bitcoin has transformed into mainstream assets, and as a company, we see great value in expanding our forms of payments for our franchisee, said the Fat brand's COO, Thayer Wiederhorn, in a statement. He said that the international franchise in particular, which operates over 20% of its restaurants, may especially benefit from the shift. Now, we look forward to utilizing Bitcoin as an efficient tool for streamlining and simplifying the payment process, Wiederhorn added. And franchisees, or those that own one of the Fat brand's quick service casual dining locations, can pay franchise and development fees, as well as their royalty payments by sending Bitcoin to a crypto wallet business account. A Fat brand's representative told Decrypt at the point Fat brands can decide whether or not it wishes to sell the Bitcoin for USD or just hold it. As for adding other payment options like Ethereum or Solana, it could possibly happen in the future, a representative for Fat brands told Decrypt, but we're starting with Bitcoin. Now, other people asked out there, what about paying for a Fat burger or milkshake from Johnny Rockets with Bitcoin? And all they had to say was potentially, but not today. So again, they're focusing on just at least starting, like at least using Bitcoin as a payment channel, so which is pretty cool to pay their royalties, and it will go to their own Bitcoin wallet or Fat brand's crypto wallet that they have in their business. So yeah, so we're probably going to be seeing more and more of this happen. I thought that this was pretty cool that they're starting to embrace Bitcoin. Thought I'd just share that out there. And then lastly in the news, a happy birthday Satoshi Nakamoto. So it's not really his birthday, but it's the date he given to us to represent like just the start of everything. But yeah, so happy birthday Satoshi Nakamoto, Bitcoin's creator's symbolic birth date hits 50. Now, the pseudonymous Bitcoin inventor's peer-to-peer foundation profile lists April 5th, 1975 as a birth date loaded with historic significance for the monetary freedom advocates. So why did he choose April 5th as his birthday date, and then same with the year? Well, let's find out. So today marks what crypto enthusiasts celebrate as Satoshi Nakamoto's 50th birthday. According to the birth date, the mysterious Bitcoin creator registered on his profile for the Peer-to-Peer Foundation, a nonprofit organization dedicated to researching and advocating for the adoption of peer-to-peer solutions. And based on his profile, Satoshi was born on April 5th, 1975. That is, of course, as unverified as most of the lore surrounding the Satoshi saga, and the dates carry symbolic weight that crypto historians find too perfect to be coincidental. So the first date is on April 5th, 1933. a day that will live in infamy among monetary freedom advocates. U.S. President Franklin Roosevelt signed Executive Order 6102, which required all Americans to turn in their gold coins, bullions, and certificates to the Federal Reserve. So that happened on April 5th, back in 1933. So this was part of Roosevelt's New Deal and policies to combat the Great Depression and aim to remove gold from circulation woes. Now, many forms of gold were subsequently made illegal for Americans to own in the following years as part of the Gold Reserve Act. Now, this lasted until December 31st, 1974, when the U.S. Congress passed legislation to restore the rights to private gold ownership. So we call it 1975. So get it? April 5th, 1975. So that's when so first it started in 1933, changed in 1974, but going into 1975 on April 5th, and that's why they put that date there. Now, the April 5th date aligns with the anniversary of the original order, suggesting that Nakamoto deliberately chose a birth date that symbolized monetary freedom. Before vanishing, person or people behind Nakamoto created Bitcoin by solving the so-called double spending problem that had plagued previous digital currency attempts. He released the Bitcoin white paper on October 31st, 2008, which was titled Bitcoin, a peer-to-peer electronic cash system, which laid the groundwork for blockchain technology and the entire cryptocurrency ecosystem. Now, Bitcoin wallets associated with Nakamoto still hold approximately between 600,000 to 1 million Bitcoin, worth billions. Now, these coins have remained untouched since his disappearance, adding to the legend of the creator who walked away from potential fortune and fame. Now, the Bitcoin community continues to honor Nakamoto's birthday each year, regardless of whether April 5th, 1975 represents a real birthday or merely a clever nod to monetary history. Now, the celebration has become part of Bitcoin's culture and a reminder of the pseudonymous founder lasting impact on finance and technology. So happy birthday, Nakamoto. We know it's not your birthday, but this is a symbolic date, April 5th. So thank you for everything you've done. But that is it. That is all of our Bitcoin news for you. Yeah, no altcoin news for you. I'll probably bring that up to tomorrow, but I thought I should just cover everything Bitcoin related just because everything we've seen the week. I'm sure people were freaked out. It's like, oh no, I bought the dip, but it keeps going down. How much longer should it last? Again, we have many days to see, 1 to 2 weeks, end of April, going into May. Again, and just decisions being made on Powell with the F2. Are we going to follow the M2 money supply? Are we going to be seeing some quantitative easing happen? So lots of stuff to take to effect right now. But that is all things Bitcoin for you. And as we look right now, Bitcoin's currently at 78,459. So like I said, we did touch 80,000 briefly an hour ago right there. But since then, we're still at the $78,000 mark. So that is it, everybody. If you want to buy some no KYC Bitcoin, not take out a loan, again, call this number down here. We got operators ready to take your calls and answer your questions, everything you need. But I hope everybody has a fantastic Monday. Let's kill it this week, work hard, and I will see you again tomorrow at noon. So see you then. Peace.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.